Welcome to our deep dive into ESAB India Ltd. You've given us a fascinating puzzle with this mix of sources. Their company website insights from Screener and even snippets from their latest annual report.
Yeah,
Let's see if by putting it all together, this is a company worth your investment.
it's intriguing right from the start. Screener places ESAB India in the capital goods sector, specializing in welding equipment and electrodes.
Yeah.
They're even listed on major BSE indexes like the BSE 250 small cap and BSE 500.
Wow.
So they're definitely not a small player.
Not small at all.
Yep.
And speaking of size, their financials are what initially caught my eye. Screener highlights that they're practically debt-free and have seen incredible profit growth, a key AHR of 23.1% over the past 5 years.
Yeah.
But then I saw their trading value, a whopping 27.2 times their book value.
Right.
That's quite a premium.
It is. The market seems to be banking on massive future earnings growth for ESAB India, valuing them based on potential rather than just current assets. Now, whether that potential is realistic,
Yep.
well, that's what we're here to unpack.
All right, let's get into those numbers. Their quarterly and annual reports reveal some interesting trends. Revenue has been steadily increasing over the past several quarters, peaking in the most recent one, ending June 30th, 2024.
Okay.
Their operating profit margin is consistently around 18–19%. And as we've already mentioned, they're practically debt-free with strong cash flow. It all seems pretty rosy.
It does paint a picture of a well-managed, profitable business.
Yeah.
They're efficiently turning sales into profit while staying financially sound. The consistent revenue growth, paired with those profit margins, really stands out.
Yeah.
Could it be that ESAB India holds a strong market position
Yeah.
and the ability to dictate pricing?
That's what I was thinking.
Yeah.
But the question is, can this level of profitability be sustained? What's fueling their recent growth spurt? Is it sustainable?
Those are the million-dollar questions. Sustaining this performance depends on several factors. Can they keep this revenue growth going? Is it tied to industry expansion,
Right.
gains in market share, or maybe new product launches?
All good points. Plus, there are the external factors to consider: the state of the global economy, commodity prices, competition.
Oh, yeah.
Those could make things unpredictable.
Absolutely. We also need to consider ESAB India's cost management. Can they maintain those high margins if the cost of their inputs goes up? Inflation's a factor we can't ignore.
Right.
Comparing their performance to others in the industry
Yeah.
might give us a sense of whether they're genuinely excelling or just riding a favorable wave.
Well, one area where they seem to be doing a lot right is corporate governance. They've
Yeah.
got an impressive array of committees: audit stakeholders, relationship nomination and remuneration, corporate social responsibility, risk management.
Wow.
You name it, they've got a committee for it.
Having this formal approach to governance is a positive sign. It suggests a commitment to transparency, accountability, and ethical practices. Investors love to see that kind of stuff.
And their annual report backs that up with specifics. The audit committee is active, having met 4 times in the past year. They've implemented strong risk management procedures in line with SEBI regulations, and there's a clear focus on corporate social responsibility, especially when it comes to promoting safe welding practices.
All of those are good signs.
Oh.
A proactive audit committee suggests a thorough review of their financials.
Yeah.
Solid risk management is key in today's world. And their emphasis on CSR shows they're not just about profits, they're thinking about their societal impact.
It's impressive, but are there any areas where they could ramp up their governance even more? What are the real indicators of top-notch governance that should put potential investors at ease?
It's a good question. One area worth examining is the true independence and effectiveness of these committees. Are they genuinely free from management influence? Do they have the expertise and resources to carry out their duties effectively? Robust governance isn't just about ticking boxes. It's about cultivating a culture of ethical behavior, transparency, and accountability at every level.
Yeah.
I'd be looking for evidence of that in how they communicate with stakeholders, handle conflicts of interest, and respond to criticism.
That's insightful. And now, shifting gears a bit, there are some fascinating details that emerged from the sources you provided. One that jumped out at me was that ESAB India's parent company is ESAB Corporation, based in Delaware, USA, with a 73.72% stake. That global connection raises some interesting questions.
Yeah.
What are your thoughts on that?
That link to a global parent company can be a double-edged sword. On the one hand, ESAB India benefits from its parent company's resources, expertise, and global network.
That global reach could be a big plus for them in areas like sourcing technology and accessing new markets.
Precisely. But on the other hand, they could also be vulnerable to global economic downturns or shifts in the parent company's strategy.
Right.
We need to understand how much autonomy ESAB India has in its operations and how they navigate the dynamics of being part of a larger multinational corporation.
Another interesting point is their very generous dividend payout policy. They've been paying out a whopping 93.1% of their profits in recent years, which would be music to the ears of any income-seeking investor.
That high payout ratio does raise some questions about their reinvestment strategy, though.
Okay.
Are they prioritizing returning cash to shareholders over investing in growth opportunities? It might suggest a company that's mature and with limited growth prospects on the horizon.
Or maybe they're just incredibly confident in their ability to consistently generate profit.
Yeah,
I guess we'll need to do some digging there.
agreed. And here's another detail worth noting. The appointment of Deloitte Haskins and Sells as their new statutory auditors for the next year. This comes after the previous auditor, SR Batliboi and Associates, mentioned limitations in their ability to audit software logs. What do you make of this transition?
Now, this is where it gets really interesting. Is this just routine auditor rotation?
Yeah.
Or a sign of potential issues with financial transparency? The previous auditor's comment about those software logs adds another layer of intrigue.
It does. And while auditor rotations are common, the timing of this one alongside the previous auditor's comments definitely warrants a closer look.
Yeah.
Does it signal a proactive move toward greater financial transparency, or could there be underlying issues that need further investigation?
That's a great question. And it's one we'll be exploring further as our deep dive continues.
Yeah.
Speaking of things that need a closer look, let's talk about related party transactions.
Ah, yes. ESAB India's annual report reveals a significant volume of transactions with related entities like ESAB Europe, GmbH, and USC Alloys Limited,
Okay.
all part of that ESAB network. They did, however, seek shareholder approval for certain material transactions, so at least there's some transparency.
Transparency is key when it comes to these types of transactions. It's all about protecting minority shareholders and ensuring the company isn't making deals that benefit related parties at their expense.
Right.
So while the disclosures are a good sign, we still need to analyze the nature and volume of these transactions.
Absolutely. It's not just about the what, but also the why behind these transactions.
So what should we be watching out for? What are the red flags that could signal potential problems in this area?
Look for transactions that fall outside the normal course of business deals that seem unusual or raise questions.
Like if they suddenly offload a bunch of assets to a related company at a ridiculously low price.
Exactly. That could be a sign they're trying to shift profits or assets to the related party.
And what about the prices of these transactions? Should we be comparing those to market value?
Absolutely. Pricing should be at arm's length, meaning it's consistent with what they'd charge an unrelated third party. If they're selling things to a related company at a price far above or below market value, that's a red flag.
So it sounds like we need to play detective and scrutinize those prices carefully. And what about the justifications the company provides for these transactions? Do those hold up under scrutiny?
That's another key piece of the puzzle. Do their explanations make sense? Do they support the pricing in terms of the transactions?
Okay, so far we've uncovered a lot about ESAB India Ltd, strong financials, impressive growth, a robust governance structure, but also those intriguing questions around the auditor transition and the nature of their related party transactions. It's definitely a complex picture, but that's what makes this deep dive so fascinating. We'll be back in a flash to uncover even more in part 2 of our exploration into ESAB India Ltd.
Welcome back. We've covered a lot of ground, but there's still much to uncover about ESAB India Ltd.
You're right. I'm particularly curious about the sustainability of those impressive profit margins. Can they really keep hovering around 18, 19% consistently?
Well, remember those external factors we discussed, commodity prices, the global economic climate competition?
Right.
Any of those could squeeze their margins. If their input costs rise or competition heats up, they might have to lower prices or accept slimmer margins to stay competitive.
That's a delicate balance, isn't it?
Yeah.
Staying ahead of the game while protecting their profitability.
Exactly. That's where their cost management strategy becomes crucial. How efficiently are they procuring raw materials? Can they streamline their production processes to reduce waste? These are key factors that will determine if those margins can hold steady.
And what about the driving force behind their recent growth spurt? Is it a sign of a booming industry, or are they truly outperforming their competitors?
Their annual report sheds some light on that. They attribute their growth to a few key factors: a focus on boosting productivity,
Okay.
expanding their product portfolio, and a favorable product mix. This suggests they're not just riding a wave,
Uh-huh.
they're actively shaping their competitive landscape.
I'm particularly intrigued by their mention of service revenue streams. It seems they're not just selling equipment,
Right.
they're providing related services as well.
That's a smart move.
Yeah.
Offering services like maintenance training and technical support allows them to create a recurring revenue stream
Yeah.
and foster stronger customer relationships.
It's like the classic razor and blades model.
Mm-hmm.
You sell the razor, then you keep selling the blade.
Yeah, precisely. In ESAB India's case, they sell the welding equipment and then provide the ongoing support and expertise to keep those machines running smoothly.
Now, to really understand their performance, we need to compare ESAB India to its industry peers. How do they stack up against the competition?
Unfortunately, the sources you provided don't offer a comprehensive competitive analysis.
Okay.
However, Screener does include a peer comparison table. We can see that ESAB India is part of the electrodes welding equipment industry, which falls under the broader capital goods non-electrical equipment sector. This gives us a starting point for identifying and comparing their performance with similar companies.
That makes sense. So we need to do a bit more digging to get a clearer picture of their competitive landscape. But based on what we've seen so far, they seem to be a well-managed, profitable company with a solid growth strategy.
I agree. However, let's not forget about that high valuation. It's predicated on the expectation of continued strong performance. Any missteps or slowdowns could trigger a correction in the stock price.
That's a crucial point. Investing in a company like ESAB India comes with potential rewards and risks.
Exactly. It's a balancing act, weighing the potential for growth against the inherent uncertainties.
Now let's shift our focus back to those related party transactions. It's a topic that often raises eyebrows, and rightfully so.
It's understandable. Anytime a company engages in significant transactions with related entities, there's potential for conflicts of interest.
Exactly. Are they striking sweetheart deals? Using these transactions to manipulate their financials? These are valid concerns.
Transparency is paramount in such situations.
To be fair, ESAB India does provide detailed disclosures in their annual report. They list the nature of the transactions, the value involved, the related parties. It's all laid out.
That's encouraging. It suggests they aren't trying to sweep anything under the rug. But remember, disclosure alone doesn't guarantee fairness. We still need to take a hard look at those transactions.
So what should set off alarm bells? What red flags should we be looking for?
First, consider the nature of those transactions. Are they routine business dealings? Or do they seem unusual one-off deals that raise questions?
For example, if they suddenly start selling off assets to a related company at a steep discount, wouldn't that be a red flag?
Absolutely. That could signal an attempt to shift profits or assets to the related party, potentially masking the true financial picture.
And what about the pricing of these transactions? Should we be comparing them to market values?
That's crucial. The pricing should be at arm's length. In other words, consistent with what they'd charge an unrelated third party. Significant deviations from market value, whether higher or lower, could be a cause for concern.
I see. So if they're selling products to a related company at a price well above or below market value, that could indicate an attempt to inflate or deflate profits, perhaps for tax purposes, or to make the related party look better.
You've got it. Those are the subtle details we need to be attuned to.
It sounds like we need to put on our detective hats and dig deep into those transactions. Scrutinize the pricing, look for unusual deals, and examine the justifications provided by ESAB India. Do they pass the smell test?
That's a great way to put it. We need to gather all the evidence and piece together the story. Remember, even if everything appears above board, related party transactions always warrant a closer look. They can introduce complexity and potential conflicts that investors need to be aware of.
And speaking of things that warrant a closer look, let's not forget about that auditor transition. The appointment of Deloitte Haskins and Sells after the previous auditor's comments about those software logs is still on my mind.
It's certainly a point that deserves further scrutiny. Auditor transitions are common, but the timing of this one, coupled with the previous auditor's comments, does raise a flag.
Could the company have switched auditors to avoid further examination of those software logs?
It's a possibility we can't ignore, or it could be a legitimate decision based on factors like cost expertise or a desire for a fresh perspective.
So how do we get to the bottom of this? What would you recommend our listener look for?
I'd suggest examining the disclosures in the company's filings. Did they provide a clear explanation for the auditor change? Were there any disagreements with the previous auditor? And keep an eye on Deloitte Haskins and Sells' audit report when it's released. Do they flag any concerns? These are all clues that can help us piece together the bigger picture.
So we've got those related party transactions and the auditor transition to consider, all while keeping in mind ESAB India's strong financials, global connections, and impressive growth. It's a lot to process, but that's what makes this deep dive so rewarding. Stay with us as we delve even deeper into these key aspects in the final part of our exploration of ESAB India Ltd. Welcome back to our deep dive into ESAB India Ltd. We've explored their financials, their growth strategy, and even touched upon the intriguing world of related party transactions and auditor transitions. Now let's shift our focus to something just as crucial:
Okay.
corporate governance. Specifically, those committees tasked with keeping the company on the straight and narrow.
It's a critical aspect to consider for sure. On paper, ESAB India seems to have a solid governance structure. But we need to look beyond the organizational chart and assess how these committees function in reality.
Right.
Do they have teeth? Are they truly effective?
Right. It's one thing to have committees in place, but it's another thing entirely for them to actively and effectively fulfill their responsibilities. Let's start with the Audit Committee. Their annual report mentions they met 4 times in the past year. That seems pretty active, right?
It's a decent frequency, but it's not the only thing that matters.
Right.
We need to look at who's on the committee. Are they truly independent of management? Do they have the financial expertise to really scrutinize the company's accounts?
And remember that comment from the previous auditor about limitations in auditing software logs?
Oh, yeah.
That raises some questions about the Audit Committee's oversight, wouldn't you say?
It certainly does. Were they aware of these limitations? And if so, did they take appropriate steps to address them? These are points that would need further investigation.
And how about the Risk Management Committee? How do we gauge their effectiveness? What should we be looking for?
Look for evidence that they've identified and assessed the key risks facing ESAB India. Have they come up with strategies to mitigate those risks? Is there a clear process for monitoring and managing them? Risk management isn't a static thing. It needs to be dynamic and responsive to the ever-changing business landscape.
So, for example, if a company operates in a volatile industry or risky geographic region, we should see evidence that their risk management committee is on top of those specific challenges.
Exactly. And it's not just about identifying the risks, it's also about having the right controls and responses in place to deal with them effectively.
Now, I have to admit that auditor transition is still bugging me. The fact that they appointed Deloitte Haskins and Sells right after the previous auditor mentioned those software log limitations, it just seems a bit too coincidental.
It's a point that definitely warrants further scrutiny. While auditor transitions are a normal part of corporate life, the timing of this one, coupled with the previous auditor's comments, does raise a red flag.
Do you think it's possible that ESAB India switched auditors to avoid further scrutiny of those software logs?
It's a possibility we can't discount. However, it could also be a completely legitimate decision based on factors like cost expertise or simply wanting a fresh perspective.
So how can our listener get to the bottom of this?
Yeah.
What should they be looking for in the company's disclosures?
I'd recommend digging into their filings and seeing if they provide a clear explanation for the change in auditors.
Okay.
Were there any disagreements with the previous auditor? And keep an eye out for Deloitte Haskins and Sells' audit report when it's released. Do they flag any concerns? These are all pieces of the puzzle that can help us understand the bigger picture.
It sounds like we've given our listener a lot to think about today. From ESAB India's strong financials and ambitious growth strategy to the nuances of corporate governance and those lingering questions surrounding the auditor transition, it's been quite a journey.
It certainly has. As with any deep dive, we've uncovered more questions than answers. Yeah.
But that's the nature of investing.
Right.
It's an ongoing process of research analysis and evaluation.
So what's the key takeaway for our listener as they contemplate ESAB India Ltd? What are the big questions they should be pondering?
I think the most crucial question is whether the company's high valuation is truly justified.
Yeah.
Can they sustain this level of profitability and growth over the long haul?
Right.
Are those related party transactions being conducted fairly and transparently?
Yeah.
And what does the auditor transition really signify? Is it a positive step towards greater transparency, or could there be something more concerning lurking beneath the surface? Those are excellent points to consider. Ultimately, the decision of whether or not to invest in ESAB India rests with our listener. We've equipped them with the information and insights, but the final call is theirs to make. It's been a fascinating exploration of ESAB India Ltd, wouldn't you say? We've delved into their financials, their corporate governance, and even uncovered some intriguing details that warrant further investigation. We encourage you, dear listener, to continue your own research and analysis. And remember, as always, happy investing.